Okay, what's up guys? It's been a while since I did something actually productive. So today, hoping I can do a little bit of that for an hour or so. Working on the VF Corp analysis. So let's take a look at Saturday. All right. Okay. So yeah, let's do this then. Starting VFC analysis again. All right. Visual Studio Code. I'm gonna pull this up. Company reports. Okay, so let's say thesis, understanding the past, forecasting the future. All right. Yeah, I feel like this is gonna be pretty tough. So VFC is a holding company for some major brands and retailers within the apparel, footwear, and accessories industry. Some of the major brands that are within its portfolio. Currently, VFC is facing a turnaround due to lower growth within its business segment, combined with higher growth in operating findings, causing overall margins to deteriorate. The company is also facing elevated debt levels compared to historic levels and among its peers. Historically, VFC has acquired despite this, I believe that VFC can turn around its business and deliver. Despite this, I believe that VFC can turn around its business is well positioned to turn around its business and is currently being undervalued by the market. So this theory is based on the following catalyst. So first one is, I think, the North Face VFC's outdoor business segment is still a very valuable portion of the business. The VFC's outdoor business segment is still valuable portion, a healthy, growing segments of the company with brands like the North Face, VFC's outdoor business segment is still a healthy growing segment of the company. Anchored by the North Face brand, seeing double-digit growth in revenues. Okay, so this is, I think, the biggest catalyst within VF Corp's path to a turnaround. So I do think that the North Face is still a really valuable brand within VF's collection of, I guess, clothing brands, apparel brands. And this business segment is still facing a lot of growth in the future, which I think is able to sustain the company for, I don't know for how long, to be honest, but for a decent while. Okay, so yeah, I can maybe rethink about these. So VFC, VFC is Bracken, maybe Bracken Darrell. Recently promoted. Was hired 6 months ago as the new CEO and has implemented a cost reduction strategy. So what did he call it? And is implementing a new business strategy. So what do they call it? So the revamped transformation program to reduce cost and dependence, increase brand autonomy. So I think the acquisition of Supreme has proved costly to the business. 2020, but international opportunities look promising. But international opportunities look promising in the future. Okay, that one sounds kind of weird. And then also for this investor, gauge capital activist investor engaged capital. Focus on reducing leverage, improving operational efficiency. Okay. 5. Okay. VFC. It's on reducing its selling off its packs business. Business strategy. Right. Historically, VFC has acquired, divested, and spinned off multiple brands. As part of overarching VFC seeks to So what's the business strategy of VF Corporation? So when I think of this company, what I've seen in the past is that, according to this, they've been able to acquire, divest, and spin off multiple brands. And I think, looking from a top-down perspective, or I guess an outside looking in, VFC has really tried to be tried to be the leaders in different types of apparel and fashion segments. So, beginning of 1990s, I think they're really focused on jeanswear. Also, I think knitwear. So jeanswear, knitwear. I'm blanking because these are flashcards that I had before, and now I can't think about them. Okay, I definitely remember jeanswear though, because that was their biggest. They had Lee, Wrangler, and I think maybe another one. I'm not 100% sure. They had a lot of, so Lee, Wrangler, and then maybe Rustler, which is a sub-brand of one of the two. So jeanswear was big, and then I believe you had the knitwear business. So I'm trying to think, what are some of those companies? Let's take a look at Inky. I remember there was one specific. Was it nutmeg? Let's see. Or what was it? Companies maybe? Investments, companies, VFC. Browse. Okay. Decorated knitwear, playwear, specialty apparel. Nutmeg. Okay. Run action sports. So, okay. There's 3. doubling in size and create the world's largest population. Bulwark brand. Seven for All Mankind, Eagle Creek, Splendid, and El Mas. Yeah, it's interesting. Alright, so I think they really did have a big focus on jeanswear. So I think that was their big thing. Historically, has tried to be the leader in the apparel, footwear, and accessories. VFC has tried to be the leader in the apparel, footwear, and accessories markets for the past 100 years. Wow. 100 plus years. In the past 100 plus years. So historically VFC has health tax recap. Okay, so it does seem like for the past 10 years. 1990s. In the 1970s to 1990s, jeans were all the rage. It's been able to stay at the top by divesting and spinning off multiple spinning off brands to keep been able to stay at the top by acquiring, divesting, and spinning off brands to maximize It's been able to stay at the top by acquiring, divesting, and spinning off brands. Okay. In 1970s, it's $2 billion. Fashion staple. In the 1970s, jeans were a fashion staple. Existed across the world. Yes. Has value. Was one of the leaders within that space. The jeans markets with valuable. Its two most valuable brands at the time: Wrangler and Lee. Okay. Both. So let's yeah, this goes pretty deep into. I'm reading through the 2010K. This goes pretty deep into some of the pension plans that they have there. Some stuff I don't really want to know, but it's interesting. Okay, jeanswear. 1998. 10K8, K4058. So Gene square. Almost 3 billion, okay. Alright, so how to Quarto, how to sites, citations and footnotes. With its 2 most valuable brands at the time, regularly. Its jeanswear business was bringing by the year 2000. Its jeanswear business was bringing in almost 3 billion dollars in revenue. Oh, inline notes. Filings. So 2000. So this is the year 2010K. Oops. Oops. Then came the shift towards towards /leisure styles. Then came the shift in fashion towards athleisure styles. Pioneered pioneered by brands like Nike and Adidas. VFC was pioneered by brands like Nike and Adidas. So VFC was to acquire thousands there was the picture. There became a shift. There became a shift in fashion trend towards acquire the North Face I think this is 2003, 2004. So he acquires North Face. Oh wow, the North Face was going in bankruptcy. Interesting. VF bought North Face for $25.4 million in cash. Jesus Christ, it's cheap. North Face acquisition. Oh, thank you, Allison. Oops. Okay. So VF Corp Vans acquisition. $2,000s for a dirt cheap price. And then Vans. $2,000 for a dirt cheap price. Vans 2004. $300. Oh, gosh. I think this is Here's Vans. Well, do I have to? SGB Media. Okay. Right. So this placed VFC at position to capitalize on the new trends within the apparel and footwear. This placed VFC in a position to capitalize on new trends within markets. Led to these today. This placed VFC in a position to capitalize on the new trends within the apparel and footwear markets. These brands helped fuel growth for the next decade. The 2010s VFC is experiencing lots of growth from its outdoor and active segments. Decided to acquire Timberland for around VFC Timberland acquisition. Timberland Company. Seems like, wow, I'm surprised they still had comments in here. Okay, I'm also gonna see if I have anything to wipe my glasses with. No, I do not, unfortunately. Okay. Very unfortunate. Might have to go to CVS tomorrow because my glasses are pretty blurry. Okay. For around 2 billion cash. So this was reasonable growth within its genes. So I need to double check. Need to double check this. In 2011, VFC acquired Timberland for around 2 billion cash. So deal book. Timberland for around 2 billion in cash. Brands. Outdoor segments. To add new brands in the outdoor segments. In 2019 or 2017, right? VFC purchased William Dickey's, adding a valuable brand to its workwear segments. Okay. The 2020s VFC face some difficulties growth its segments anchored by bands. It's acquired Supreme Street Brand Supreme for around $2 billion. Okay. Alright, so I think it was when 2020 VFC started to face some difficulties in growth within its active segment. And so they decided to acquire $2 billion. 2020. This caused Vans to leverage up in order to finance, VFC to leverage up, figure out how much in order to finance the deal, which proved to be So finds the deal. Looking, since then, the Supreme Acquisition has proved to be a fairly bad purchase for VFC, as it has VFC, since it's had to impair writes down the value of goodwill tangibles due to the devaluation Supreme and its expected cash flows. Right, so I think what had happened was this company so VF Corp was they purchased Supreme, I think for a really, really high valuation, maybe 35 times EBITDA. So double check that. But I think that is one of the largest valuations for any type of, yeah, it'll be interesting. So figure out how much VFC bought Supreme for and at what multiple. And then also I think we should so mention Steve Rendell's shift towards DTC. Okay. Also maybe mention the Contour Brands spinoff. So these are big things that I also didn't mention here, because this was just really focusing on the acquisition history, acquisition timeline. T90s. See, 1970s to 1990s, 1990s to 2000s, 2010, 2020s. Okay, VFC Supreme Acquisition. So VFC news. VFC annual reports. Parts 3. Net revenues, assets. Okay, so yeah, there's a big debt to equity jump. From see, so we have Python. Long-term debts 2021 is equal to 5.709. Long-term debts 2020 is equal to 2.608. Debt to equity. Short-term borrowings, accrued liabilities. Okay. Term debts. Short-term debts 2020 is equal to Let's also add the current portion. Term debts 2021 is equal to 0.001. I guess it's the same. Yeah. Just cancel out. Oh, okay. It's okay. So short-term debts is equal to 1.228. Okay, so we have total debts 2021 is equal to long-term debt 2021 plus short-term debt 2021 plus current portion long-term debt 2021. All right. Total debts 2020 is equal to long-term debt 2020 plus short-term debts 2020 plus current portion long-term debt 2021 from 2020. Okay, and then we have, let's take a look at total equity is equal to stockholders' equity, right? For apparel. Debt to equity ratios 2020. Just coverage ratio. Huh. Total equity is equal to debt to equity 2021 is equal to total debt. Total equity 2021, okay. Total equity 2020 is equal to 3.023. Oh wait, no. 3.357. total equity 2020. So debt to equity 2020 is equal to total debt 2020 divided by total equity 2020. So print debt to equity 2021 2020. I see. Okay. Let's run this again. 1.87. Point 14. From 1.14 debt to equity to 1.87. To leverage up, VFC leverage up, debt to equity. To for my calculation. Debts as short term. Okay. Source. Okay. Year 2021 10K. As long term debts plus short term borrowings plus current portion of long-term debts. Okay. So what is VFC's? kinds of deals. Okay. So we've seen that, okay, in 2020, VF Corporation had to leverage up almost $3 billion. So 1.14 to 1.87 debt to equity, which is a substantial amount. That's almost half the amount of equity. More than half the amount of equity. Has raised the proportion of debt to almost twice the amount of equity within the business. So yeah, that's a lot. I think, yeah. Payments. Okay. C's cream. shoes. Supreme hoodie was biggest in 2017. Supreme box logo. Yeah, it doesn't seem like it's as big now. Okay. These are crazy. Okay. Okay. I think that's probably good for right now. My mind is starting to go crazy a little bit. So I think I'm gonna stop this right here, but made some good progress on kind of the business strategy and what my theory or thesis going into this is going to be. And yeah, I think it'll be interesting to see. All right. Yeah, I'm gonna have to, I think, include maybe the different risks involved, and also the different risk and also the dynamics and the competitors of VF Corp. But I'm curious to see what this actually looks like now that I'm thinking about it. So how do I publish this again? Is it preview? Oh, shoot. Oh, rendering VFC QMD. Wait a minute. Command Shift K. Wait. No module found YAML. Quarto preview to HTML no browser. From YAML import safe load. So it doesn't seem like Quarto has YAML. Quarto. Oh, maybe Jupyter. Python 3. Oh wait, maybe monthly reports. Okay. TOC. Okay, let's see. Fuck. What if I do this? Preview. Huh. Not too sure why this is happening. Review. Auto check. What if we existing Python environments Anaconda? Oh. Not too sure. What if I change my kernel? Yeah, it doesn't change anything. If I just restarted this over again. Visual Studio Code. Oh, there he is. Okay. I don't know what. Yeah, what changed? Oh my god. Did everything I do just go to shit? Okay, no, thank God. Oh my God, okay. Preview. Why is this? The guys on GitHub weren't able to help. On the list. Piano. Let's see. Do I have to start my virtual environment? New window. Let's open. So this one is running, and this one is stored in Bzang. So this one is saying that starting Python 3 kernel. From YAML playwrights. Honda. Let's see. Honda. So Bizing Anaconda 3. Oh man, okay. It's an environment name. Oh man, this one's Conda. So what is Conda in it? Deactivates. Applications, Quarto, share. Starting Python 3. starting Python 3 kernel. Run cell. Okay, so that's running. I have my conda environment turned on. And this one worked fine. What do I have here? So copy. Users.bzang. I think it'll be here, probably actually. QMD. Okay. Oops. Open. So let's go to the desktop. All right. So if we put it on our desktop, it works. Oh, but we don't have Python, I don't think. Jupyter Python 3. Let's see if this changes anything. Yeah, shit. So it's the same problem. Python, it's raw Python. Okay. Orthoconda environments. Conda install YAML. Maybe there isn't. Same thing, okay. So do you have Jupyter? Conda and CSH. Does that do anything? Conda deactivates. Conda activates /env. Let's see. What if I create environments in okay. So if I do it in by saying fund Conda act. Let's see. Quarto render. Okay, so let's try this. Conda deactivate. Alright. Conda install Jupyter. Okay, wait, let's leave real quick. Oh man, this is frustrating. I have no idea what I'm doing. I'm not gonna lie. No idea what I'm doing. No idea what I'm doing. Okay, let's take a look. Just a Zing fun. Open up that bad boy. Okay, let's Conda deactivate. Alright, Conda activate. Oh man. Wait, Conda active. Conda install Jupyter. Quarto preview. Quarto render, I think, right? CD company reports. Quarto render. VFC document. Let's see. Oh. Is that what I need? Oh my god. I think I just needed to render and instead of preview it. Okay. Let's see. Oh, that's beautiful. Okay. Okay, let's go! We got it to render. I was just using the wrong command this whole time. That's fucking me up. But this should work now. And man, I gotta go shower, dude. I can smell my stink. I've been rubbing off some shit off my hair. I was running. I went for a run earlier and then I just never showered, so gotta go do that right now. In that case, the stream will end today. I was able to make some progress on this analysis of VF Corporation. I think today kind of helped me understand a little bit from the high level qualitative standpoint of what the strategy has been like for VF Corporation. I guess looking through this from the perspective of how VFC has made acquisitions and has sold off businesses in the past 30 years, all the way from 1970s until the 2020s. So that's 50 years actually. But originally, the company started out really as the pioneer or one of the biggest brands or the biggest companies within the jeanswear business. So that was 1970s to 1990s. And those brands that were really the most valuable brands for VF Corporation were Lee and Wrangler. And then came the 2000s when there was really a shift in fashion and apparel and footwear towards more athletic and athleisure types of products. And so that was when VF Corp eventually acquired the North Face for a pretty cheap price relative, I think, to their revenues, and maybe expected cash flows, just because I think the company was going through some internal movements or internal strifes, something along those lines. So VFC acquired it for about 155 billion, and then it also acquired VFC also acquired Vans in 2004. So North Face was 2000, Vans was 2004. Vans was around 400 billion in cash. 400 billion in cash. And so these two brands really drove growth in revenues and in operating income and net income for VFC within the next decade, and allowed it to purchase Timberland in 2011 and then William Dickinson in, I think, 2017. So I think fast forward to 2020, that was when VFC decided to invest in Supreme. And so I think this was a questionable investment. In terms of popularity, I think Supreme at this point was facing a little bit of a decline in its popularity compared to, I think its peak was probably 2017, 2018, according to Google Trends. And so that was an interesting acquisition by Steve Rendell. I think in the past, Supreme has had a lot of collaborations with Vans and the North Face. So maybe there could have been some synergies there that the company thought would be pretty valuable. But I think more importantly, the Supreme acquisition ended up causing VF Corporation to leverage up a lot. So before the acquisition, they had a debt to equity ratio of about 1.14, and then after the acquisition, it rose to 1.8. So that's almost a 0.6 increase. So more than half, almost half of, actually more than half of the existing debt to equity ratio. So that's a lot of debt that VF Corp has put onto itself, albeit I think at this time interest rates were relatively low, so I don't think it should cause that much financial pressure for the company. I think it issued some commercial paper. I have to double check that. But yeah, looking back today, it's currently 2024, so it's been about 3 years since the acquisition, and Supreme had been written down, I think, twice in fiscal 2023 actually. So that's in the year of 2022, and it's been written down by more than $800 million. So it hasn't been a great acquisition, but I think moving forward, Supreme recently opened some stores in the international scene, specifically Korea, and also the most recent season of Supreme, I think the company has really captured some of the existing audience or the existing customers, and then also maybe attracting new customers as well. I'm not 100% sure on that, but I just saw on Instagram, just going through Instagram, scrolling through some articles online, that they had a really great season in terms of product launches this past winter, and so maybe that has some really good effects on the top line, bottom line for Supreme. Although I didn't realize that they didn't have a creative director. I think he resigned. There was some controversy regarding a picture being used in a t-shirt or graphic design for some type of article of clothing. So he stepped down. So Supreme hasn't had a creative director for the past 6 months now. I think this was in August. So that's definitely a big thing to consider. All right. And then also the catalyst. So the catalyst is the last thing. The catalyst for growth for VF Corporation. So I think the biggest one is going to be the outdoor segment. From what I've read through the 10Ks, VF Corporation seems to have a really strong growth within the outdoor segment, specifically with the North Face. It's been posting double-digit growth for about a decade now and hasn't been showing signs of slowing down. And I think just looking at the fashion industry, the apparel and footwear industry today, a lot of trends are more athletic, more athleisure, and I still don't see anything. I don't see the market going away from that. Although big risk for that is, I think there was some sort of cybersecurity incident which had meaningful impacts on the North Face. So we'll see what happens with that. And then number 2, Bracken Darrell, new CEO of VF Corporation, was appointed back in August, and he's been really trying to implement this new strategy, business strategy. I think he calls it reinvent, to be able to reduce the debt levels, reduce costs, about $300 million in cost reductions, and also bring back autonomy to the brands, the individual brands, instead of having everything concentrated on the corporate level. Third, I want to say is I think it has to do with the activist investors. So, man, I forgot what the activist investor is called. Let's take a look. Acquisition of Supreme has proved costly to the business by international. Okay, so 3, despite. Okay, so the Supreme acquisition. 4, Engage Capital. Okay, so the activist investor Engage Capital has built a pretty decent stake within VF Corporation, and they're citing that with better operational efficiency and cost reductions, the company is able to increase its stock price and really increase free cash flow. Okay, so VFC plans on selling of its PAX business. Let's see. It's cool. Yeah, this is sick. This is sick. Alright. What's this? Range per share basic, okay. Alright, in that case, gonna go now. Very tired, but excited. So, see you for now.